other announcements will continue on in January. Brian, Mandy, any other touch points you want to discuss from an announcement standpoint?
Not now. We do intend to resume at some point in person, but we're kind of playing a wait and see approach. So if you have feedback and are dying to get together in person, please send us an email or a message through one of our meetup groups.
For sure. Yeah. I mean, at the end of the day, we're just trying to continue to bring value to the community so that you guys learn as much as possible and continue to network as much as possible. So I'm going to do a couple introductions over here. So I'll go ahead and let Brian do an introduction first. Give us some background as to what you've been working on, some of the excitement of the deals that you've been doing, and love to hear more so we can kind of let the group know what you're doing.
No problem. Thanks, Kevin. So I am Brian Kopendorfer. I live in Chicago. I live on the Irving Park neighborhood on the north side. I've been a multifamily broker for the last 13 years. Started acquiring properties about a year and a half or so ago is when I started focusing on it. And over that time, acquired just under 300 units so far, all as joint ventures with a few different groups. I just acquired with Mandy a 53-unit property down in Indianapolis. I have another 58-unit property under contract right now in the Valparaiso area. And we're going back down to Indy tomorrow to look at more. So trying to stay active, trying to stay, cautious but aggressive, and keep building. Every property is a new learning experience, and it's been a lot of fun. So,
congrats, and congrats on the 58 unit. That's awesome. What is it? What's the background on it? Out of curiosity.
Yeah, it was actually an off-market deal. So we were looking at a 34 units, or I was actually showing a client of mine a 34-unit property down there, and the owner, who's also the property manager, happened to know of a different owner who he manages that property for, who was considering selling off market. So we just drove us down the street and put in an offer and went from there. So just about networking.
Referrals, man, that's a great little lesson right there. Property manager, the people you work with, they know people who have buildings. So yeah. Mandy, please give us a little bit of introduction as well.
Yeah, sure. Mandy McAllister. I am by day a medical device rep. Actually, I see one of my former colleagues on here. Dana, welcome. I have been investing in multifamily since 2016. I did my first small multi then. I believe very strongly in having a couple of different buckets. I like my small multis for kind of personal. It's my floor of whatever my cash flow earnings coming in the door are. And then I like the growth bucket in larger acquisitions like the one I did with Brian, the 53 unit in Indianapolis. And, like you said, hopefully keeping it going with maybe a slight tweak to, the criteria we're looking for. I really like that in-place asset, the stabilized asset right now, and with a really good loan. So, yeah, small multis, mid-size multis. I've been a passive investor, done lots of interesting stuff.
And then once again, you just partnered up with Brian on that. Was it 53?
53. Yep, 53.
Yep.
Veranda at Speedway.
And keep in mind, people, there's the law of the first deal. You hear it so often. I think Michael Block has coined it. But once you get your foot in the door with agency debt, and once people know that you're serious buyers, it really opens up a whole nother world. So keep that in mind. That's not a small feat to get your first deal done during a pandemic. So congratulations.
Well, and it's in any given market, right? So, Brian has acquired in Northwest Indiana, but now that we've acquired in Indianapolis, lots more stuff is coming our way, So wherever that first deal happens, that's how you break into a new market.
Yeah.
Cool.
I'll correctly, and one of them was today for potential off-market opportunity.
Oops. Brian, we can't hear you, bud.
Yep.
There you go.
Is it better?
Yeah, way better.
I was just saying that just from acquiring the one property, the 53 units a few weeks ago, we've already had a couple additional brokers start reaching out to us, and one of them sent me an address today that might be an off-market opportunity in the next couple of weeks. So just getting in the marketplace shows that you're a serious buyer, and brokers will reach out to you.
Awesome, man. Awesome. So I'll give an intro on myself, and then I think Sterling should be popping in here any minute. So my name is Kevin Dugan. I run a small investment firm, Altus Investment Group. I live in Los Angeles, and my company is actually out in Chicago. We do residential turnkey, so I own a property management company, general contracting. We buy houses, renovate them, rent them up, and then sell them as a rental investment as a turnkey product. So I've been investing since 2012. Left my corporate gig back in last year, September. So it's been about a year now. And it's been an awesome ride to, run my own company, and with plenty of challenges, to say the least. Anytime you're an owner operator, there's a lot of difficulties. And I'm big on education. So I'd love to help teach people to shortcut the mistakes that I've made. Been a part of the multifamily community for the last 2.5 years. So I've GP'd on a 208 unit in San Antonio. I've LP'd on a 200 unit in Arizona. And then I've been a Multifamily Masters, like one of the original groups back in beginning of 2018. So great community, very big on abundance mindset across the board, lots of collaborations. And that's why we continue to host these meetups, so that hopefully people can create good synergy and get deals done. So
that's actually a good follow-up question, Kev. You said you've, hopefully people can learn from your mistakes. What would you say your biggest mistake has been?
Biggest mistake that I'd say at the beginning was doing too much. Know who you are as much as possible, and then try and find partners that collaborate with you. So owning a property management company, value add currently, but very difficult to do that. To build it up. It's a whole business in itself. So if I just simplified and focused on acquisitions and raising money versus the general contracting, the property management, and the acquisitions and sales, it would have been simpler.
Very cool. What about you, Bri? What's something people could learn from your biggest mistake?
I think the very first deal that we did in Northwest Indiana, the prior owner had been releasing a ton of units. So I would say two things. One, they leased a bunch of units just a few months before they sold them. So they were just kind of putting people in there, not really caring about their credit. They were also charging a lot of utility billback fees that couldn't necessarily be sustainable. And we didn't do a good enough job of verifying those on the front end and seeing if those are sustainable long term. And so our other income is lower than we had projected because we just didn't double check that. That's something I will not make a mistake on again.
Very cool. Well, it looks like we just had Sterling pop in. Sterling, hello. Welcome. I think you're on mute. Oh, sorry. There you go.
Hello, fantastic. Great to see you, Mandy.
Yeah, great seeing you too. Thank you so much for being here. We're pumped about it.
Oh, for sure. Yeah, we're ready to drop some bombs for everyone.
Oh, I'm digging it. A Sterling White bomb, you guys. Get ready. So we just did a couple of introductions of our group. So if you don't mind, would you, not that we need one, but would you give us a little introduction of yourself, please?
Yeah, so just a Spark Note, Cliff Note version for everyone. Yes, I do have a bald head, so just want to make that clear for everyone. And yeah, born and raised here in Indianapolis, Indiana, not so good parts of the city. Within the presentation, I'll go a little bit into it as well, but just to fast forward is now own just under 400 units, all strictly multifamily. That's over 75 units, of which formerly had 150 single families and exited out of all those. So total portfolio is just under $20 million and still on the acquisition side, based here in Indianapolis, Indiana.
Very cool. So would you prefer to do this as kind of like an interview question and answer, or did you have a presentation you were hoping to do?
I would say we can do the presentation, but I believe what would be most value to everyone if we could open up to Q&A, or I can quickly go into the presentation for everyone. It'll be very quick. And then after that, we can just open up to question and answer.
I like it. Let's do it. Brian, can you make it so he can share his screen if he needs to? Bada bing.
All righty, let's rock and roll. Oh, he just switched and made me
Oh.
the host, so I'm just gonna run with this whole entire
Welcome to
Zoom
the
now.
Sterling Show, everyone.
That's the only way I know how to do it.
Fair enough. I've done the same thing before too. So I'm just going to go ahead and just jump into things. And also, if anyone has questions, you can ask them throughout here, and I'll quickly look to get through this because presentations can be a little bit mundane, of course. But I really just want to get through the content in terms of just overarching creative ways that I've been able to leverage to find deals, especially still in the midst of this COVID. So my goal is to give you the absolute tools and the knowledge that I'm accumulated and also gotten from others of what's worked for me, because all the apartments, including the one I'm in that I own, that's 80 units, was all direct to owner. That's been my approach. So for those of you, no distractions, whether you're on those dating apps, swiping left, swiping right, whether you're on Facebook, swiping, scrolling, would love to have your full attention to ultimately just really deliver you just experience share. So there's that. So myself, there's me, Sterlin White, born and raised in Indianapolis, Indiana. And for those of you who are just now coming across me, is the type of environment I grew up in just wasn't the greatest. You wouldn't want to walk your dog at night or even during the day. And however, through that, fraternal twin brother, single mother, and we grew up in welfare, Section 8 housing, food stamps. And I remember one instance, everyone that's on here, that we were actually eating in the kitchen area. My brother and I are about 5 or 6 years old. And as soon as we get done eating, we were eating like ramen noodles and some cut up hot dogs. As soon as we go upstairs, a bullet comes right through the back patio where we were sitting. So I may not be here, he may not be here, but ended up not being a product of that environment. And luckily, mother moved us out from the inner city to the suburbs. We were still in lower income housing, but a completely different surroundings. So through that, got started in real estate 2009. Things were not going so well on the construction side. And then shortly after that, that's when I really fell in love with real estate, but not so much getting my hands dirty, and then shifted to the investing, bought my very first property, no money out of pocket, single family house. It was $25,000 was the purchase price, $25,000 for the rehab. And no, this was not a shed. Here in Indianapolis, you can actually get some very affordable property. It was about a C-class asset, and then scaled up to 150 single families. And then in 2017, made my jump to multifamily, being my first deal was 46 units. So I'll share that case study at a later point in time and how that was found, just to give you all some insights on, especially in today's climate, is really going above beyond with the creativeness of just the constant follow-up. So there's that. Today, control just over $18 million worth of real estate, have raised over $10.5 million worth of equity from investors to fund the deals that I've had. And when I say I, there's a team involved, of course, and then have driven over 3,000 prospective investors to my platform. And then out of those, 300 or so I've actually converted. So that's just a little context on myself. Also, I want to go into the mindset. And Mandy, if we want, we can have some, we could do the questions at the end, or we can do them throughout as well.
Let's hold them to the end. I want to hear what you have to say so that we're sure we have time.
Okay. All righty. Perfect. So one thing I want to go into the mindset of on the acquisitions, and this has really helped me, is that even when you're buying, you are selling. So it is all sales. I'm a firm believer of that. 2 books that are my go-to. Love Him or Hate Him, Grant Cardone. I know he can be quite polarizing. On one end, he's here, and then other people are like, I hate him. Other people are like, yeah. So that's one book that's really helped me. Either you're doing the selling or you're being sold. And then there's Ultimate Sales Machine by Chet Holmes. I'm not affiliated by any of these. They've just worked for me along with other sales content. But I've been able to leverage this on the acquisition side because it's all about selling. And this even translates to outside of business too. I've got an 8-year-old little angel. And in case you're wondering what I look like with a full head of hair, that's down to my back like Tarzan, that is her. And the other day, she sold me on why she wanted to stay up for bedtime, and I wanted her to go at a reasonable time, and that did not work. She sold me. So either you're doing the selling or you're being sold. So, all right. So going into more of the mindset is what I had mentioned is about selling yourself and the various ways in which you can sell yourself, because the approach that I take is going direct to owner. So there's going through brokers, and I've gone that route previously, and I still nurture those relationships. But in today's climate, especially, I had a broker, this was 2 days ago, send me over a deal. I underwrote it. The most we could have paid for it was $7 million. And this was just over 100 units with $7 million. And they mentioned that, yeah, this is going to trade closer to about $12.5 million. So that goes to show you the huge swing. And we've always just taken the approach going direct, because right now sellers' expectations are very high. And then you've got people that are willing to park their money versus wanting to, who knows exactly how they underwrite the deals in essence. So, but yeah, just want to provide that example, but selling yourself, that's the first thing. There's a integrity book, one thing that I leverage myself, which is just a simple presentation that goes into, okay, this is the operator's background. This is our investment model. These are the case studies of the deals we've previously done. And I will send this to a prospective owner that I'm looking to convert to a seller to really provide some credibility. So that's one thing with selling yourself. The next is making it about a relationship. Has really helped me tremendously. So this particular property that I'm in ended up purchasing it for $3.35 million, of which it could have sold, I would say minimum for 3.8 if it was listed with a broker. And many of you may be asking the question, well, why didn't they just go with the broker to sell it for more? Because price was not the main focus for that individual. One, we were able to form a relationship. And then also, they just wanted the money to start doing development in actually Chicago to do some subdivisions. So interesting enough, small world, but about relationship and not making it about a transaction that has worked for me. And one thing I want to mention for everyone, just in terms of background, is bought a 46 unit, a 50 unit, 280 units, and 156 unit, all going direct to owners. So this is just the tactics that I'm going to share that has worked for us. So relationships. And then the last is the follow-up. I will tell everyone who is on here, the follow-up is the greatest sales secret by far. And this has been an absolute game changer for myself personally, because many people don't realize, and this is a personal experience here, that it takes between the 6 to 8 attempt just to get in contact with someone. Most of the time, people don't even send direct mail or cold call. We like to do cold call as our original touch point. When they do it, they stop too soon. I had someone reach out to me and said direct mail doesn't work. And I asked them how many times did they send out the campaign? They said they only sent it out once. And I almost hung up the phone, but just wanted to be cordial and say, hey, you definitely got to do it more than that in terms of the follow-up. So I do want to talk about the steps to a deal, just chronologically for everyone, just to further, I like to look at it as a recipe and just further keep replicating it. So the first is determining buying criteria. This is one thing that has helped for me, meaning that Indianapolis, Indiana, apartments, 75 to 150 units that are C-class assets, so built older, closer to about 1970. So from that, understanding the buying criteria, and then that allows us to be zero-like focused in our marketing efforts. And I provided a sample of mine. And then, of course, you want to determine your market here, Indianapolis, love Louisville, Kentucky. I prefer to be not tenant friendly, but landlord friendly versus tenant friendly, which I know out there in, is it Cook County? I know some people pronounce it another way, but I don't want to get into that with it being a little bit more tenant friendly. So here in Indianapolis, the turnaround time, you show up to court, and I don't show up to court anymore. We have a team that does that. But in essence, the first thing the judge asks is, have you paid rent? Are you behind? They say no, you've got to get out the following week. Sometimes they'll do the sob story as well, but it's not even close to being 6 or 7 months or so. It's about 30-day time frame in terms of the turnaround. So determining your market and then determining your actual buying criteria and then breaking that down to a neighborhood with what you could call a submarket. That's what I mentioned. And then from there is to take the approach and actually doing the prospecting. So the very first deal that I acquired, I actually done it through Driving for Dollars. And then on the multifamily side is to a more scalable approach is actually pull lists. Leveraging Reonomy is my go-to that I leverage, not affiliated with it. And another is CoStar. So those are the two. However, if you're just getting started, you don't have the capital, is Driving for Dollars is one good approach. And then you could upload to a source such as batch skip tracing for them to then give you all the specific contacts. And then pick up the phone and call. So Mandy, is this too elementary for everyone? I want to ensure that I'm touching on if I need to go into the nuts and bolts or keep it high level.
No, I think we do have a couple of questions here about in terms of the frequency of your follow-up. Are you calling? Are you hiring VAs to call? Can you maybe dig a little deeper into that, please?
So now there is actually a team involved of which, and this is a whole robust system in itself, but in essence, there's a team, and I actually outsource to the Philippines in terms of pay anywhere between about $8 to $10 per hour, because I prefer to invest a little bit more. Some people like to pay closer to $4 to $6, and with that, you get what you pay for. I'm willing to actually pay more because I've actually had people here in the US and actually in the office with me making the calls and pay them more. And I'm actually able to get more of a production and lower costs by going direct to the Philippines. And one source that I use for those of you who are on here is onlinejobs.ph. That is onlinejobs.ph. And that's where I go direct to actually hire individuals from the Philippines. So that's one good source, and you can get other, marketing or whatever you can think of from that platform, not just cold callers. And yeah, they're the ones that's doing all of the outbound calls. And then once the owner, there's certain triggers. So the person, we reach out to them, they say, well, I'd be willing to sell for the right price. That if you give me an offer I can't refuse, or I'm selling top dollar, we move on to someone else. And then from there is if they say that I just recently relocated, I'm tired of managing the property, all of those motivation triggers, that's when the appointment is then set for me.
Got it. Okay. How do you manage them? Is there a call on a regular basis? Do you kind of have someone oversee them, or is there a platform?
So I use a CRM. There's two main ones that I know of. One is Mojo Dialer. I use close.com. And the reason why I use close.com is it's a lot more simpler, and it's made for outbound prospecting. So that's why I chose this platform. There's tons of CRMs that are out there, but I chose one that was what we did, which was primarily outbound communication. And everything is, I can see the amount of calls. From there, I can see the amount of, appointment set, so I can track the conversion rate. One thing we also look into is the amount of letter of intents we sent out, and then letter of intents to actually go into contract. So we're looking at all the various KPIs to enable us to get our top goal that we're working towards.
Very cool. Do you supply them with scripts, or what sort of guidance do you give them in terms of those conversations?
Yeah, so everything is scripted out, and on a daily basis, I'm actually, before they start, we actually role play. And I like to look at it as similar to a sports team. For those of you who are not I would say, I'm a Steelers fan. So love them or hate them, Ben Roethlisberger. So with that is, for sports teams, is they practice before they actually get onto the field. They don't practice when they get on the field. So that's what we do with our role playing. So to answer your question, Manny, is we do have a script, and the script goes the opener, the reason, so the greeting, reason for the call, fact finding, and then they set the appointment. And then that's when I run it from there. And how the opening goes is, hey, John, Sterling here. Did I catch you at a bad time? They say many of the times the people you're calling says, yeah, you caught me at a bad time. What can I help you with? Hey, completely understand. I know you got tons of things going on. The reason for the call is I bought Bentwood Apartments right across the street from yours and wanted to personally reach out to see if you consider selling. No, I'm not interested. Hey, Jim, I completely understand. I knew you said before I even called. However, tell you what, give me 30 seconds. You don't like what you hear, I'll hang up on myself. Sound fair? So these are the types of things that we do in a role playing session, because they get all these types of calls all the time. So we're essentially looking to break through, get into that fact finding stage to see if there's actually a desire and a need and a solution that we can provide for them to be able to sell their property.
Very cool. Thank you for that.
Yeah,
Let's
for
see
sure.
this case study.
Yes. Okay. So this is the very first deal that I was able to acquire in terms of when made the shift from single family to multifamily. In terms of that position that I'm doing, I have no clue. I was like squatting. I was super excited, Mandy. I don't know what it was. So that was the first deal. And this was all done by driving for dollars. So there in the left-hand corner, or it's maybe you're right, I'm pretty sure it's left-hand corner, was a 2001 Honda Accord, and that's what I was driving. And I was looking for properties that needed work. So looking at this that you see here is the parking lot looked like an alligator's back. It's just very bland in terms of when you're looking at it. Let me actually pull up the, okay, I want to exit out of this so I can show everyone, but I'll do that at a later point. I wanted to see how I can actually minimize this. Okay, let me see. All right, so I want to show everyone the Google Street View of this actual property. So this was the very first one that was acquired, and we have actually since sold this. But I want to show everyone what it looked like when I was driving past it. Okay, there we go. Okay, so this is what it looked like. So formerly it was named Southview Apartments. You see the parking lot that's here. Can everyone still see my screen, Andy?
Yep.
Okay, and you can see the parking lot, very distressed. The building just looks very bland. And then from here is everything's public record. So went to the online, and then saw it was owning the LLC. And then from there, went and actually found who filed the LLC. And then from there, simply just picked up the phone and called them, and actually called them at the very right time to where this was their very last apartment that they were selling, and they were shifting from being an operator to a debt collector. And then here is the after pictures of actually what we did to the property in terms of we rebranded it in terms of the name. We painted it. We did the parking lot, which was always one of the key things I would mention to everyone is the curb appeal and the exterior is really important, especially when you're repositioning a property and those new residents are coming into when you're showing them those new available units. We painted the decks. So this is just, I'm trying to think why I was going in this direction, but just wanted to show you some insights on what we ended up doing to that particular property.
Beautiful transformation. So you said that you've gone full cycle on this one, right? You just sold this one?
Yeah, this is going full cycle, correct.
Mm-hmm. Okay. Tell us about that experience.
It was a lot. So in terms of first deal, first experience, and one thing is just being more conservative on the numbers. So for this deal in particular, and let me go ahead and stop sharing screen. So this deal in particular ended up being not a horrific winter months. So it ended up, we got delays in terms of our renovations, which pushed things back. And then also we did a debt structure with our investor partners versus an equity. So it was a 8% debt. However, when we were behind in terms of our business plan is we actually had to cover the difference to get them that 8%. We knew that potentially going in, we would have to get to that. And then also at a later point, one of the boilers went out that was completely unexpected in terms of a cost. So overall, there was more money so total purchase price on this deal, $900,000. $200 was put down to acquire it. The seller carried back $700,000, and then we raised $485,000 from investors to take care of improvements. So one thing is we looking back should have raised more, because on older properties there tends to be more renovations than expected because it's just an older property. So that's one thing that we experienced. And then also the boiler system, we were as owners paying heat. So of course the residents, it could be below 10 degrees, and of course they're cranking up the heat, walking around in their apartments in underwear. So that was one thing, that the boilers were eating at the heat. And then we were looking to also transition from smaller, and of course it's all subjective, to more larger apartments, to where we can get the on-site manager as well as a maintenance tech. And then we
Mhm.
just 1031 exchange buyer came in and offered us something we couldn't refuse, and then we just ended up selling.
Very cool. So you didn't do like a debt restructure in there, or or did you do kind of a refinance event to pay off those investors, or it was just the selling?
Yeah,
That
the selling got
got it.
everyone out. So we were able to pay off the investors and also
Okay.
pay off the
Anyway.
note that was the owner or the seller had as well.
Hmm. Very cool. So, I do have some questions around, it sounds like you're still in acquisition mode, and I've heard your talks a number of times. And one of my favorite hacks is doing whatever it takes to track down the people
In
and
an
really
ethical way,
in an
everyone, of
ethical
course.
way. Well, right. But like the Facebook, finding the daughter on Facebook or something. Are there any other kind of tips for digging into, things that you've figured out that might help someone track down an owner?
Yeah, and for those of you on here that don't know that story that Mandy's referring to, so it was an apartment here, just over 100 units in Indianapolis, and had so much difficulties getting in touch with the decision maker. So what I did was I used a source, been verified, not affiliated with it, and that is BEENverified.com. It's just a database to where you can just search for people's contact information, all that, and then from there is I ended up finding one of the relatives, which was the daughter. So what I did was I went to Facebook, and everyone who's on here, I kept it strictly business because she was in her early 20s, but in essence is kept it business related, and said, hey, looking to get in touch with your father, just relating to XYZ property. And boom, she gave me the number directly. So it's just one of those things, going the extra mile. And then also, gosh, I'm trying to think other creative ways. I mean, there's just so many in terms of getting in touch. So one recent deal that we acquired it was so many spider webs associated with it. So it was a syndication that was put together 2 decades ago. Yes, 20 years ago, close to that. So some people had passed. And so just in essence, getting through all the spider webs, found an individual with a very unique last name, ended up tracing that to someone who's in real estate in Florida. And then from there is ended up reaching out to them. They said, yeah, I'm one of the decision makers and operators of the property now. So that's just one of those things. I actually sent this very same deal over to brokers, asked them, do you have any contacts or any relations with the operators? And they said no. And then when we actually closed on it at a later point, they said, how in the heck did you end up finding who I had difficulty? So I feel for everyone who's on here, when you hit that wall, just a personal experience share is that others have hit that wall, and a lot of times they actually move on to another deal in those various scenarios. So that's one experience share I would provide to people.
Very cool. In terms of COVID, right? Has your acquisition strategy changed, or has your criteria changed at all?
So over the course of the year, our acquisition strategy has changed, and that's just due to our recent holdings have. So our most recent deal, which one was 80 unit and the other was 156, were close to $3 million in terms of renovations. So that is a lot of money that is actually floating around. These were 1970s product. So pre-COVID, our model had shifted anyway to actually newer constructed property.
Oh, got it. Okay. So what vintage are you looking now?
1980s, 2000.
Okay. And still just, is it specific neighborhoods in Indy? I've got to imagine you've got to get really surgical to, do
Yeah,
the strategy you're doing.
we've still kept it to Indianapolis, but we've also expanded to other markets. We've been in other markets. So Louisville, Kentucky is one market. Definitely not Chicago. Just kidding. Purdue. Yeah,
Me too.
there is Cincinnati, Ohio. There is Columbus, Ohio, and St. Louis, Missouri as well. So sticking to those, and we're steadily on the acquisitions and just looking for opportunities at this moment.
Very, very cool. What about how you're managing your current portfolio? How has any strategy changed mid-COVID?
In terms of especially Indianapolis, things really haven't really missed the beat. And that's why when even now that sellers' expectations are still the way they are and people are still buying it for that. So the apartment I'm in, last I checked, the occupancy was 98.9. And also the collections was over 95%. So it's just one of those, what we've experienced hasn't really skipped the beat. There is the eviction memorandum, or however you pronounce that second
Moratorium.
but there are ways around that, and that's all to the team. I give kudos to them of Vanessa, who's actually, she would normally sit in the chair that I'm in, but in essence she has experience with well over managing 3,000 units regionally, and she's the one that really just heads overseeing all of our portfolio from a day-to-day standpoint.
So you are, you have a property management firm yourself now. You've grown into that. Yes.
I third party. So formerly I did own the property management company, but ended up exiting out of the
oh,
management
interesting.
Yes.
Tell me more about that. Tell me the why behind that.
So in essence, don't want to go too much into it, but the main partners ended up having different visions with what to do with the company.
Got it.
So in essence, I exited out of the management company along with my former company, still own the apartments. But in essence, now the property management company that I built is now my third party property management company.
I see. Oh, I get it. Okay. Because I mean, the way that I've kind of looked at things is once you reach a certain footprint, it makes sense to try to bring that all in house. So it's interesting to kind of hear how you went opposite that.
I would say looking back is prefer, because when you're acquiring and you're managing, those are two different animals. So starting out preferably with a third party and then hit at scale, more so about 1,000, 15, maybe 2,000 units, then at that point decide to bring it in-house.
Okay. 1,500 is your number?
Correct.
Yeah. Well, I mean, you're well on your way. That's the plan moving forward. That's what's next.
Yeah. I mean, on the day-to-day, I write my goals down. And one of the goals that I have is just over 3,000 units across the Midwest.
Very cool. 1,500 units, how many would you need in one given spot? So, I mean, it could be 1,500 across these half dozen markets that you've listed?
Correct.
Okay. Okay. You wouldn't need any specific number in one spot.
No, it would just be scattered across multiple cities and markets.
Okay, I want to make sure that I catch these questions. In terms of automatic voicemailers, do you have any experience with that?
I don't do those personally. I know others that do that, but I haven't gone that direction. I've done it before. Yeah, it was okay. So I wouldn't be the best point of contact on that.
Got it. Okay. You mentioned you acquired your first property with no money out of pocket. How were you able to get started in real estate investing and cover construction costs in that scenario?
So is this on the multifamily, or I believe he's mentioning real estate as a whole?
I guess I don't know what the question is, but your first multifamily acquisition, did you have money out of pocket there?
No. So it was all from investors, meaning that, so what I do is very similar to what I'm doing now, is I've actually built a personal brand. One of the top, partnerships that I've done that I steadily do is with Bigger Pockets. I really built a lot of my personal brand on the backbone of them. And then I started my own podcast. I was on others' podcasts. And then from there I was understanding where prospective investors' eyes are and where their ears are, and I would position myself to be of value. And then that's where that came from. What I had mentioned earlier is driving close to about 3,000 individuals to sign up on the platform to view our opportunities, and out of that, closer to about 300 actually invested. So for that first deal, it started with friends and family, with the single families, and then as we looked to scale, that's when we started to go out across the country and across the world.
Walk me through that investor funnel a little more. So you did a great job of getting your face, your bald head, as you put it, in front of all of the investor eyes where they're looking. Walk me through kind of how you work to onboard them.
Yeah. So once they sign up, first thing they have to do, especially how we're structured, we target both accredited and non-accredited. So when they visit our platform, they're not able to see anything because we don't general solicit. So that's one thing. So they have to set a phone call up with us, and we establish that relationship on an ongoing. We have that communication. And then once we have an opportunity that's now available, that's when, let's say, we get through the feasibility period on a particular property. And then now we say, okay, investors, we've got closing in 60 days. And then after the feasibility is done, we open it up for investment. We do a webinar that I would say within about 5 to 6 days. And then from there, that's when we go over the investment, the business plan, what we're looking to execute. And then at the end, we give a push to, hey, here's where you can go on our website to hit the invest now. They've got all the due diligence documents. Everything can be completed online. And once they decide they want to move forward, our subscription agreement goes out to them. They sign it. And then from there, at the bottom of the subscription agreement is where they can wire or send a check.
Okay, so it's completely automated, it sounds like.
Correct.
Is this, I remember a number of times ago that we talked, you were working on building something like that out. Is this your product or is this another group's?
This is another group's product that they're using.
Okay. Would you mind sharing that?
Yeah, it's Syndication Pro. I personally use it myself.
Okay.
But yeah, that's one in terms of a syndication platform that you can use. There's quite a bit that's out there, but that's one I personally use as a way just for people to get into the system, and then you could just nurture it and everything can be done online. Because I feel things have shifted more to that versus the formerly traditional approach. Some people still send, what do you call that? Legal documents in the mail. So I don't understand that, but yeah.
Okay, very cool. All right. In terms of ongoing communication with your investors, what does that look like and how do you prioritize it? Kind of maybe walk me through that.
Yeah, so one thing is with investors, something goes incorrect or wrong, always fully transparent on that. And then also I have my partner who I own the apartments with is on the investor relations side. So they deal mostly with that. But I do know on a weekly basis, we communicate with them just to say, hey, here's what's going on with the project. And if you have any questions, don't hesitate to reach out to, well, actually it's on a monthly basis, in terms of that communication. And then on a quarterly, that's when we send out a report. Actually, just recently, now we're sending out our quarterly disbursements for the end of Q3. And it really just breaks down on their dashboard through the platform that says, hey, this is your investment. This is what you've earned. This is your annualized return. This is your cash on cash, etc.
Okay, very cool. In terms of, we were talking right before you joined about the host's individual mistakes that might shorten a learning curve. Can you maybe tell us one or two hiccups that you hit that might shorten some learning curves?
I would say, and there's most likely people that's still going to make the mistake because I had someone on the podcast the other day. It was Michael Becker. He's out in Dallas and owns about 5,000 units. And so one of the things that he talked about was we said that, yes, it's good to learn from your own mistakes, but it's even better to learn from others. And I asked him, why do people still make those mistakes even though we've said them? And he just mentioned that people have to actually go through it to now witness the pain of it. So, so this is one that I heard from others and then I actually did it myself. I was like, yeah, I'm not going to do that again. But in essence, it is always raising enough money to take care of the improvements associated with the property and to not say, we can just go ahead and take it out of cash flow. Please, you guys, just a personal experience here. And I know there's people that are going to do it anyway. Hopefully it works out for you. But from other people, it never has really worked out for them, or very finite. But there was a 50 unit that we ended up not in. The reason why we decided to take it out of cash flow because it was too tight on the numbers. So if it's too tight for you to raise all the money up front, then that's a good indication to have more of an abundance mindset versus a scarcity mindset, and then just move on to the next one. Luckily on that particular deal, we ended up selling that one that we were at the height of the market when we sold it. Imagine if we were at the bottom of the market and tried exiting out of that. So we ended up getting on the luck side and getting top dollar in terms of the exit, but some people may not have that benefit. So that's the experience share one there.
Cool. Is there maybe a rule of thumb for how much additional capital you raise on these projects?
I would say on this, we really didn't even raise enough to take care of the improvements of turning all of the units.
Mm.
So I believe most people do about 15 to 20% buffer of the renovations. So that's one thing that we'll do on our particular project, especially on the older constructed ones.
Very cool. What's next for you?
Yeah.
You told me, you talked about the podcast. I didn't realize you had a podcast. Tell me a little bit about that.
Yeah, the real estate experience. So yeah, that's where I actually had someone who Grant Cardone, who's someone I get so much in terms of information from, and in terms of content, how I learned about multifamily. But yeah, I just talk about real estate, my personal journey. I bring other guests on as well. So that's one thing. But I would say my overarching philosophy, Mandy, is really just being the individual to be the ideal and the message of the kids who are in the environment that I came from, because I feel, I don't know what it was, some higher being or what individual that ended up pulling me out of that environment to, hey, Sterling, you should actually go in this direction versus this other. Because one thing I want to is that for everyone on here, I have a twin brother. He took a completely different trajectory in life. He is actually facing hard time, but that really shows you the various converging ways and where most people actually take. And I just want to be the message for people that, hey, this is the way I took. There's a way out of it, and I came from exactly where you came from.
Do you think that there's one thing that convinced you, or, mindset stuff? I think mindset is so incredibly important. It's 80% of everything that we do. 20% is just mechanics, right?
I believe more.
But yeah, I believe I would buy that for sure. But I do want to know, we do have a question here too. Is there one thing or something that you think caused you to choose the path that your brother didn't?
So one story for everyone. And also one thing that helped was when our mother moved us out from the inner city to the suburbs, he went back to that environment and I stayed where I was. So that was one thing. And also what really helped to change the trajectory of my life. So quick story for everyone is my early college days, having at a college party, having a good time, doing what college kids do. And then, so from that is I ended up drifting away from the crowd, and I'm out in the middle of this lake or pond, whatever it is, the difference is. And I'm out in the middle of this boat or canoe, whatever the difference from that is. I'm just sitting in it. And from that is there's this beaming question that comes down to me and says, Sterling, is this what you want to do with your life? I don't know what it was. And then I answered back and I just said, no, this is not what I want to do with my life. And up until that point, I was just drifting into average land. And from there, first thing I did was cut out all my friends, good people, but they were not going where I wanted to go. Second was cut out the news. Still to this day, I don't get involved with the news. It's so negative. I didn't even know the football season started and that the NBA playoffs was what it was. So that goes to show how much I'm out of it.
I have a building in Kenosha, and somebody said, "Is everything okay in Kenosha?" I'm like, "Why? Nothing's happening. It's to Kenosha."
Oh,
right? Yeah.
So yeah, and for those of you who are like, "Oh, you're not into," if something is important enough, someone will let you know. That's always worked for me. And then the third was mindset, Mandy. That was huge because just growing up and in my childhood days, I got so grounded on having all these limiting beliefs. One belief I had was wealthy and rich people, in order for them to get to that, they had to do unethical things and conniving things. Imagine someone who's ethical, they wouldn't want to be rich because there's a conflict there. So that's one thing that was really drowned on me. And then also that in order to get into real estate, it was only for the wealthy. You needed a large amount of cash. And that was not true. When I got my first deal, I actually had negative funds in my bank account. And a couple years prior to that, I was actually so broke that I had to use a relative's food stamp card. So that just goes to show that starting with the mindset, I was able to rewire a lot of my thinking and replace a lot of those limiting beliefs. And when I made that transition, actually buy my first deal, I didn't even have, I just knew that I was at A, I want to get to Z, which is that first deal. How do I do it and bridge the gap? And that's what I ended up doing.
Very cool. I know we're up against a hard stop for you here at 8, but you mentioned your goals and that you write them down every day, right? So is there maybe other habits that you have, or would you mind sharing some of those goals in our remaining minutes here?
Yeah, I would say in terms of habits, workout. That's one thing I do on a consistent basis. I do sales training every single day, and that's every day. I listen to some form of content on the sales side because, as mentioned at the beginning, is I'm a firm believer that sales is everything. In terms of additional goals that I do have, I mean, I've got traveling to 20 various countries. And then also within my goals, I always write down affirmations as well. And that one big one that I do have is that I am the creator of my destiny. And I believe everyone, and not sounding all cliche and woo-foo and all that, that we're all creators of our destinies because that there's so many external things that go on out there. I actually asked my little one, what are things that we can control in life and things that we can't control? And she said that we can control ourselves, but we can't control what goes on out there. And I said, that is very true. Gave her a big hug and said, thank you. Now go to bed.
What a wise kid you are creating, Sterling. How neat. Very cool.
It wasn't just me. So yeah, that's all.
Science, you know. I'm so grateful that you joined us today. Thank you very much. Any final words for your fellow multifamily investors here out of Chicago?
Yeah, I would say everyone is. I know that we're in times right now that are very uncertain, uncertainty times, but I believe the way to create certainty is just to put in the work. And at this time, I've been sharpening my axe and taking steps, still in acquisitions mode, but taking even more steps to invest more in the business with putting processes in place, SOPs, procedures. And SOPs are standard operating procedures. So in essence, when we hire someone, for instance, okay, this is what we do day one, and we checklist everything out. So once things open up even more, we're able to really just scale and go that much faster without a lot of things breaking. So that's one thing. And then also to even the greatest investment I would say over real estate is in yourself. And I'm constantly every day wanting to figure out how can I be better than the day I was before? And if I don't do something of some, oh yeah, there we go. Perfect. Yeah, so that's one thing on I'm on this steady journey of figuring out who Sterling White is and then also where I can go.
I love it. I admire you so much, man. Would you mind making Brian host again before you have to sign off?
I will be taking over the Zoom. So yeah. I will see you, Mandy, and I will see you, Brian. Okay, I will go ahead and make him host.
We are going to do a little bit of breakout room networking. Thank you. And make sure everyone that you're subscribing to his podcast. I know I will be as soon as we log off here. Yes.
Perfect.
And we're down in it. So Brian and I have acquired an asset down in Speedway. So we're down your direction pretty frequently now. We're actually coming tomorrow morning. So maybe sometime we'll have coffee.
Oh yeah, for sure, Mandy. Well, congrats on that. And let's definitely keep the communication lines open.
Yes, sir.
All righty. Have a great one, everyone.
Brian, you want to take over for us here?